We're going to do a triple threat today. We've got some guests coming in from MFS Investment Management Canada. They're talking about 3 amazing surveys from 3 points of view. I'm really looking forward to it. The subject is, retirement, savings, planning, execution, all of that. I know that you've read this in the past. So what are you looking to get out of today, having been an avid survey reader?
Yeah, so I look forward to this one every year. And those that have kind of followed along on the podcast may recall a couple of years ago, we had MFS come and talk to us about the member survey and the sponsor survey. So now they've added, as you said, the triple threat, the advisor survey in addition to it. So I'm looking forward to whether the perspectives that are important for plan members, are they equally important to plan sponsors? And then, what are advisors saying about members and sponsors that they work with? So I love that they have all 3 perspectives being represented. So I would say that's what I'm really looking forward to learning more about.
Right on. Let's bring them in. I want to give a great warm welcome to our 2 guests today from MFS Investment Management Canada. We have Jeri Savage, Lead Retirement Strategist of Strategy and Insights Group, and Nick DeLisi, Director of Institutional Sales of Group Retirement. Welcome, Nick. Welcome, Jeri. Nick, if you want to kick us off and tell us a bit about your background with MFS, and as we're sprinkling in things, I'd love to get to know you. If you want to tell us, what do you do for fun as well?
Yeah, no, I appreciate it. And thanks so much for having us, Caroline. Happy to be here and look forward to kind of talking for the next 30 or 40 minutes or so. Yeah, maybe just briefly on my background. So I've been in the industry for about 15 years now. I've been at MFS for almost the past 4 years. And while I've been in the kind of group retirement role for a little over a year, group retirement at DC is certainly not new to me. Before joining MFS, I was at Aon as an investment consultant, but for the last 4 years of that, leading their DC practice. So really, really passionate about DC, about helping plan members, and I think you're probably going to hear that from Jeri as well. And I think we all share that here. But that's really kind of my professional background thus far. As far as what I like to do for fun, so I think it's maybe more of a question of what my kids like to do for fun these days. Yeah, three young kids at home, 7 and under, but kind of they're really starting to get more into sports and stuff. So a lot of it's around that and seeing how I can get them to have a good time, improve their skills, and kind of see where we go from there. So I find that takes up a lot of my time on the weekends.
Awesome. So really what you're saying is the Benefits Alliance voice is where you have fun.
Yeah, exactly.
Awesome. Jeri, same. Tell us about yourself, your background, and what you like to do for fun.
Sure. So also very happy to be here today. Jeri Savage, I'm our lead retirement strategist at MFS. I am also entering in my 4th year at the firm, but have been in the retirement industry for well over 20 years at this point. In my current capacity, I really do focus on all things retirement. We have a global business, so it includes looking at trends and best practices across the US, Canada, and other markets. And, I know we're going to talk a little bit about some of our survey work today, but that is getting to hear the voice of the different constituents globally helps us provide a lot of insights and think about how to best position members for retirement success. I think in terms of what I like to do for fun, Nick, I really liked your answer. My kids are a little older, so I have teenagers who have decided they like to travel. So I already like to obviously travel a bunch for work, but have realized that recreational travel is very enjoyable. And now that I have my family on board, we are probably always in the midst of either planning or going on another trip. So I spend a lot of time packing and unpacking a suitcase for various reasons.
So Jeri, what was your best location over the last 12 years and why?
12 years. That's a hard one.
12 months. 12 months. Let's do
Okay.
12 months.
12 months is much easier. Little less than a year ago, we took a trip in February to Iceland, and we spent the week, so in the winter in Iceland, and we saw things that you can't see in other environments, and everybody loved it for very different reasons.
Great answer. Always a bucket list destination for me, hopefully one day. I'm in Nick's boat though. I have three three as well, three kids under the age of 9. So my life unfortunately revolves around them. But once there's a little bit extra time for us, Iceland is definitely on the bucket list.
Great. Well, let's get into Jeri and Nick. Tell us a little bit about the great work that you've been doing recently, and hence the topic that we're going to be covering off today.
Yeah, maybe I can start off briefly, just kind of set the scene, and I'll let Jeri kind of get into the nuts and bolts, and I think some of the key takeaways, which are hopefully really helpful for all of our listeners as they kind of work with their clients, or just kind of gives them some backup data on, I think, a lot of the things that they are working with every day. So we run 3 surveys right now. The first is a plan member survey, which we've done for the past 6 years annually, but going back over 10 years. So that's kind of been our flagship survey for a number of years, and I think tends to get a lot of interest and excitement around that. So happy to talk through that. We've done a plan sponsor survey, and this is the third year that we're doing it. We're in the, I think, just got the data back for the 2025 survey at this point. So excited to maybe give a few sneak peeks there. And we survey U.S. plan sponsors just from a breadth and depth perspective to kind of get their sense on how they're feeling about different things from just a DC landscape perspective, but also just to give a bit of a different lens on some of those member items that we ask. How do they feel about their plan membership and how they're ready for retirement? And then really hot off the press is new this year is a retirement plan advisor survey that we've conducted, and it's I think it was just released last week, so very hot off the presses. We're going to talk through that a little bit. So again, just from a breadth perspective, US focused on retirement plan advisors, and it's very similar. Their perspective on their business, their practice, but also a lot of what they're concerned about with plan members, what they're hearing, seeing, offering, what's working, what's not. So I think what we're excited to do is really give a perspective from these 3 different lenses on how we're helping members, how we're trying to help deliver better outcomes for members, and kind of hopefully give some interesting and actionable takeaways for everybody that's listening. But maybe with kind of that scene setting out of the way a little bit, happy to let Jeri take us through some of the key takeaways a little bit.
Sure. Yeah, I like the way you introduced that, Nick. For me, I think it's so helpful to have the various points of view. And the reasons that we do the surveys from these different audiences is to be able to see where there's alignment, right? Specifically, as you think about what members tell us versus what sponsors say that they're doing. And it's even perhaps more important where there isn't that alignment and where there are areas or opportunities for improvement. So we're very excited to also have that advisor perspective, as well as just thinking about how we title these surveys. We call the Global Retirement Member Survey, the Road to Better Outcomes. We call the Plan Sponsor Survey Building Better Outcomes. And then we've now called the Advisor Survey Bridging Better Outcomes, because they're working as that conduit in between. In terms of takeaways across the surveys, we are really focused on member concern and retirement readiness is a key theme. How members behave and think about investment selection, how they're constructing portfolios for their retirement needs is a critical component. And then from the member perspective, thinking about, we're calling it retirement expectations versus reality. And so we have slightly different variations across the sponsor and advisor surveys as well. But I would say some of the key themes that we found, that have really been pervasive over the last few years, and there's been agreement across all 3 constituents that, number one, there are competing financial priorities that are getting in the way of plan members adequately saving for retirement. So that's kind of one key takeaway. As it pertains to investments, we're finding the role of target dates, specifically in Canada as well as in the US, are critically important. The role that they play in a plan, how members use them, ensuring proper diversification. There's definitely some work to do around how members understand or maybe misunderstand their use in some cases. And then, takeaways as we think about what is the impact to the retirement business as a whole, and again, setting members up for success, is we're tying kind of all of our insights into the ideas that accumulation is a really essential part of the retirement process. for members. So don't lose sight of the fact that you need to save adequately to get to retirement in the first place. And then once you do get to retirement, the idea that retirement is personal. So we have spent a lot of time understanding kind of the products and the array of different solutions that are out there. And what we find consistently from the member perspective is that they have unique needs and circumstances. They don't see a one size fits all solution as the answer for them, that they really are addressing it as more of a personal and unique circumstance to them.
Yeah, good. So within those themes, I'm hearing, the competing interests for investing money and having that savings. And so I can imagine that does lead to that, there's a question around confidence in retirement. And so what are some of the main drivers in this decline in retirement confidence?
Yeah, there are a number of things from these confidence metrics. I guess the first thing I would point to is that because we've done this survey year over year, we've seen that level of confidence has declined consistently year over year to its low point for Canadian members to only 27% of members say that they're confident that they can retire at the age that they want to. The other thing we find is that it varies by generation. So actually interesting for the Canadian audience is that not all generations have that lack of confidence. We actually see a higher degree of confidence among the boomer generation, so those closest to retirement. But when we look into some of the reasons why they're not as confident, we find a couple things. So one, they all tell us that they have a lot of financial concerns, and it's not just about retirement, which probably makes sense intuitively, but things like inflation impacting their purchasing power is a main concern. Personal savings issues, so like saving for an emergency, comes up. So just to point out that saving for retirement isn't often top of the list, that they have these other financial concerns that they're thinking about. The other thing that we've found that I think ties to this decline in overall retirement confidence is year over year, we've asked 3 questions of members, and we've found an uptick in their responses. So we've asked them, agree or disagree with a couple different statements. And so the level of agreement of I will need to save more than I planned has consistently gone up over time. The I will need to work longer than I planned has also increased over time and has remained relatively steady. The comment, I no longer think I'll be able to retire. So, and that's global. I'm speaking from a Canadian perspective on the data, but it's a phenomenon we find globally as well. So why are they answering those questions in that way? We think it directly ties to those competing financial priorities, because they also tell us that things are like other financial obligations are getting in the way of saving adequately for retirement.
That's good. So the good news is the people that are closer to retirement feel confident. That's great. And I think the people that are not confident, hopefully over time, as there's fewer competing priorities, plan members are able to invest more and have a bigger nest egg that can be invested, and hopefully that amounts to more money for retirement. Curious, in the study that you did for the plan sponsor, do their worries align with any of the plan member worries, or are what's keeping plan sponsors up at night different from what we just talked about from plan members?
Yeah, it's a great question. I would say last year, I would have told you that they were very much aligned, that sponsors are not confident either in their members' ability to retire. So Nick alluded to, we're just digesting this year's survey information, and we actually found this year that sponsors are a little bit more confident than they were last year. So their confidence is starting to improve. And I think a component of this is we adjusted the way that we asked the question to sponsors this year. We asked them basically to break it out by generation. Since we found those generational changes or differences in the member survey, we then asked that question in a similar manner for sponsors as well. And I'm going to find that data. So they will tell you that kind of for the average member, it's still only 33% are very confident that their average member can retire when they want to. But when you break that down by that generation, again, those numbers improve dramatically to a high of 51% for Gen X to 66% for boomers. So those are the two cohorts that are closest to retirement. So we see some meaningful improvement in those numbers. And that also ties to that finding among the members that the boomers are the most confident.
Yeah, and you know what, Jeri, I'll tell you, like, just anecdotally speaking, when we as advisors are doing our annual reviews with our clients, and some of the record keepers have retirement planning tools, and those tools are goal based, and we are able to get data that says, a certain cohort of employees that are closer to retirement are more on track versus those that are younger. So I think it aligns with your data. So I'm kind of validating with what we see in real life. And I think a lot of that has to do with the people closer to retirement have big account balances. They've been equity market investors over the last 3-4 years with huge account balances that have, returned 10% annually or more per year. And they're there. Whereas the people that are 40 years away from retirement, as you said, they have different priorities. I'm glad with what we see in the field, with your data, everything seems to be checking out. Curious, I'm wondering, like, from the advisor perspective, how are your advisors responding to how they can help with those plan member worries and plan sponsor worries? Is there a tie-in of some sort with what advisors are seeing out there?
Absolutely. So the advisor survey is a new survey for us. So we did ask about what they tell us about their retirement business, as well as what they are saying about investment selection and what they see in investment menus. And then we ask them a component of retirement confidence as well. I think when they talk about their own business, some of the resources that they offer is really interesting. So, there's a high degree of responses tied to the value in offering in-person or virtual meetings. So having that one-on-one consultation, equally so the ability to offer retirement planning support as well as member education seminars. A little lower down the list are things like financial wellness support or broader holistic wealth planning. But so to me, one of the takeaways is that one-on-one consultation is really critical. And then I think another thing that we found from this data in particular is that, again, I alluded to this at the beginning, that, we really believe that retirement is personal. The advisors are telling us as well that they're seeing more of a call for that personalized guidance and advice. They also are telling us that they're seeing an increased demand for individual or education seminars, and that maybe building out those financial wellness capabilities could be important to the growth of their own business going forward.
I'm curious to know, when you talk about providing that guidance in retirement, is that mostly from the financial standpoint, or is it also from the psychological standpoint? Are they looking for someone to help guide them? Like, what does life look like post-retirement? Is that what you're getting at as well?
A little bit. I do think, from a financial advisor's perspective, it is more so focused on the financial elements of how to have a successful retirement. I think what we've found from some of our member findings, though, are that there's a sense of it's directly tied to their degree of confidence, having someone step in and provide that level of guidance to them. I think it more speaks to like the distrust in our own abilities to handle things on our own, and feeling more confident when we feel a quote unquote expert is stepping in to offer that level of help.
Yeah, and I'll kind of double click on that, Jeri and Caroline. I think from a survey perspective, when you haven't met with an advisor and you haven't done a financial plan, you're less confident. So you may think that you are not ready for retirement, which is 30, 40 years from now. But if you put the pen to paper and you do a plan and you're able to plug in future contributions and the growth of those contributions over time, the plan member in reality may be okay at retirement. They just don't know it. So I think the worries are legit, but they may not be necessary if advisors who are happy to provide that support are doing it, but you have to ask for it. So I'm glad plan members are asking for it and are appreciating. And I think once those members, when they actually do a plan, your hope is that their confidence improves over time, which I bet the baby boomer generation with bigger balances, they've probably done a plan and they know they are going to be okay because it's supported by data.
I think that's such a good point, Raheem, that the element of having a plan in and of itself, driving that level of confidence. And right? Are people having a higher degree of confidence as they age because they have the plan or because they have the assets or because they have both? Our member survey looks at retiree data as well. And so we didn't touch on this yet, but retirees have the highest degree of confidence of all. In terms of that their income and what they have will last for their retirement, because in essence, right, they've made that decision and they have the plan and they're confident in their abilities to make it work or maybe be a little bit more flexible once they've crossed over into retirement.
Yeah, I'll tell you an anecdote. We were working with a plan member and kind of building out a plan for them that was, once you get to retirement, you are going to be taking out 5% of your account balance per year to live off of. And then when you plug in 5% growth on the money you have invested, your pool doesn't deplete. Mm-hmm. And it was so hard to tell the plan. They thought it was like funny math that, hey, why isn't my account balance depleting? I'm taking money out. And then you talk to them about yes, you are taking out money, but the pool is still being invested. Right. So you're netting out and you're living off that money, and your asset balance is depleting a lot slower than you think it is. But it's just about, as we said, formalizing and seeing those illustrations, which will give you confidence. So well said. If it's okay, I wanted to kind of pivot to the data around target date. I always find this so fascinating because obviously target date funds have been around in Canada now for 15 plus years and are a very popular investment choice. But every time I read your survey, I find it puzzling, and I'm sad as an advisor that no matter how much education we do, they're still a little misunderstood. So can you tell us a little bit about what's great about how target date funds are understood and, how are they misunderstood at the same time?
Yeah, absolutely. And you hit the nail on the head that year over year, we see members definitely get some things right when it comes to target date funds, but persistently and globally, I should say, they have some key misunderstandings that do not seem to be improving despite all of our engagement and education efforts. So members predominantly understand that a target date fund gets more conservative as it gets closer to retirement. And they also seem to understand that it's an easy way to diversify their investments. So they understand the level that it gets more conservative and its use for diversification. We see this across all members, all generations, again, across the US and Canada. And we have trend data going back the last 5 years that show that level of consistency. The negative side to that is we see equally pervasive trends on. There are 3 elements that a member typically misunderstands. So if you ask them to agree or disagree with certain statements, they tend to believe that a target date fund will provide a guaranteed stream of income in retirement, that it will provide a guaranteed rate of return, or that it somehow changes its investments to invest entirely in cash or other low risk investments in retirement. So and again, this is seen across all generations. I would say a few years ago, we would have pointed out the data that at least it declines with age. And like, again, to everything we've been speaking about, like they tend to get on board and understand a little bit more as we near closer to retirement. This year's data does not suggest that. We see kind of equally troubling statistics around Gen X and baby boomers misunderstanding that point.
That's interesting. And then the other thing that your data is corroborating what we see, in real life, and I find it so puzzling, is why do you think target date funds are more popular with younger cohorts and less popular with the boomers? Any idea on why? Because if I would have intuitively thought that people closer to retirement appreciate them more, but from what I see your data showing is the opposite, is younger people utilize them more. Any idea as to why that would be the case?
I do think part of, well, I would hazard to guess there are two reasons, really. So the first is just when target date came into the market. If you think about those that have been in retirement plans and have been working their whole careers, the older you are, the more likely you have started accumulating a retirement balance before the presence of target date funds. And
Right.
if
So you
you've
never
been
did
with your
anything.
Correct. And
Okay.
okay, the second phenomenon there is kind of how target date funds have been used as a default option for members and participants in the US who don't make those investment elections. And that's far more common for younger members who are just entering the
They're new plan
workforce
members.
yeah.
Right.
So I
Okay.
think a little bit of that is inertia working in both directions there. But then the second point is as people age, and one, it's far less common to kind of work your whole career in one location now, right? It's far more common to have multiple jobs and have therefore multiple retirement balances. Thinking about as we age, our needs and circumstances, people are far more likely to think that they are unique and need to address their retirement concerns in a different way. And they tend to opt out of target date funds and build their own investment portfolios through kind of the rest of the investment lineup there. And some of that could be good, and some of that, right, if they're not quite sure what they're doing, may not be as good.
Okay. I wonder, maybe also, I just thought of it. It could maybe be baby boomers, bigger account balances, working with advisors, and maybe the advisors are helping customize their portfolios that align with their overall investment strategy of what they may have outside of the group retirement plan as well. That could be a
Yes,
contributor.
exactly.
I'm curious, thinking about all these, perceived answers based on the employee population here. I'm thinking about how might, some of the older generation of folks answer the question of, so what age you think you'll retire at? Because, I will say we grew up, where mom, dad, age 65. It's just kind of in our brains, right? Like that's the target. But I'm wondering, the younger generation, when you looked at those answers, did they have a firm age in mind, or is it more of a feeling or like a range? I'm curious to see any differences there. What did you see in those insights?
Yeah, I love this question. We have asked for a few years about retirement expectations in terms of timing. And so we specifically ask, do you expect your retirement to be a hard stop, a gradual transition? And we define this, right? A gradual transition, meaning you reduce your hours or you take on part time work, or they're allowed to answer, I'm not sure, or I don't think I'm going to retire. So it's less about the age because, right, an age can have kind of, I guess, different thoughts to the individual answering the question. We wanted to get more a sense of how that retirement transition takes place. So what we've found across members who are still working today anticipate that they're going to have a more gradual transition into retirement. This year's survey responses, 63% of members think that they will have a gradual transition versus only 21% think they'll have a hard stop. So that final day at, call it age 65 or whatever age it might be, where they stop working. Instead, what we found from the retirees in that same survey is pretty much the exact opposite. So retirees are far more likely to say that they've had that hard stop. So 69% of them say that their retirement was a hard stop, and only 26% had that gradual transition. A couple different factors at play there of like our thoughts on retirement are probably evolving, but are they necessarily reality? Is that feasible for everybody?
Well, I think what's interesting that comes, from that data too is, the retirees are giving you what their lived experience was. And a
Yeah.
lot of those retirees who had that hard stop, and I think this is one of the most interesting things from the member survey, is that a lot of them retired for circumstances outside of their control. You're not necessarily thinking of that when you're in your 20s, 30s, 40s, right?
Mm-hmm.
That something might cut your working life short. So I think that's really interesting. And that kind of gets to some of that, we might all think there might be a more gradual transition, but that hard stop can sometimes be not always planned for. And I think, Raheem, it gets back to something you said a little bit earlier, kind of going on is, kind of that retirement plan. We talk a lot about starting early in this industry from a savings perspective, but I think starting earlier from a planning perspective as well can pay really big dividends to kind of suss out a few of these different items, misperceptions, and really drive confidence higher.
Yeah, and you know what, we have it's great to work with an advisor, but let's say you don't have an advisor relationship. There are so many free tools that CRA has built or the carriers have built that easily allows you to put together a plan. And to your point, Nick, if you did it earlier, you can make adjustments to it, right? It's the danger is having a retirement plan be made for you at 55, and you want to retire at 60. Now you have to course correct if it doesn't line up. I think these are very, very exciting findings.
Yeah. Speaking of exciting, I like to always ask the surprise factor. So I'll start with Nick. When you read through these 3 different surveys looking at, employer, plan member, advisor, what stuck out for you as the surprise? What did you read about that you just did not see coming?
I think I'll give you a second one. I think the stat that I just suggested on the people who have to expected was a big kind of wow moment for me, and it's one that I anchor to quite a lot. But I mentioned that. So maybe I think the other thing is just I would have maybe suspected that members would have been more negative than plan sponsors, and seeing that there's some pretty decent correlation, I think was interesting to me, and I think ultimately a good sign too. We're not dealing with 2 very disparate groups that have different views. They're fairly aligned in that, so that was a surprise to me that there was such alignment there.
Jeri, what was surprising for you?
Yeah, I think now that we have some of the new sponsor survey data coming in, exactly that, the alignment that we saw in confidence seems to be dissipating, and that degree of sponsor confidence improvement this year, in some ways makes perfect sense. We've had stronger economic conditions in some respects. People are seeing their account balances grow. It's how do you then help members see the same scenarios and have their confidence grow as well, and continue to make good decisions. I guess across all 3 surveys, I think I've underestimated the outside concerns that really ultimately are driving this level of retirement confidence. So, it is very, very apparent across all 3 surveys, the role that competing financial priorities are playing. So, my entire profession is to talk about retirement, and this is an area outside of retirement that's having potentially the greatest impact on everything that we do. Taking a step back and thinking through, well, what does that really mean? And how do we help address some of those competing financial priorities so that we can all start talking about retirement again?
Yeah, I think what you do is every time you sign up for a Netflix subscription, it should tell you an opportunity cost of $15 a month equates to half a year of retirement savings, and that might do the trick.
I love it.
Yeah, imagine, right? Like every time you're in a group retirement plan, you have a software that says, hey, before you buy, go on this and check to see the impact. Not the best way to live life, but it may get you to a good retirement outcome nonetheless.
There might be an AI scenario that you tell AI to poke you every time you spend money, but I'm going to leave that aside. I get it.
Exactly. That's a different podcast.
So let's look at decumulation. Let's talk about taking the funds out. People have retired. There's been a lot of noise in the Canadian market, and what are you finding that's been the experience? Canadian U.S. market. Would love to hear all about that.
Sure. So we've asked a number of questions around decumulation, and this did start with our U.S. respondent base first, and we were trying to get a sense of demand, essentially, of the specific retirement income products that are being brought to market and potentially added to DC plans. And so, I mean, just without going into the details of the specific percentages, what we've found across the plan sponsor survey and the US responses from the global retirement survey is that there isn't necessarily the demand. There's a lot of supply, and it does not match up with the level of demand. So sponsors are not as excited about implementing things that feel complicated and costly. And more importantly, members don't necessarily intend to stay in their plan post-retirement. And that's a global finding. So that we do see also in the Canadian data, that there is a real belief in kind of leaving your plan and moving on post-retirement. So what is the role of some of these strategies if the members do not stick around to utilize them? This year, I will say we did ask a new set of questions around in-plan solution preferences. And so we were trying to be cute, and we're hoping that by the way that we frame the questions, we would see some obvious trade-offs in the responses. It was, do you value flexibility or do you want an annuity? And instead, what we found, again, a global in terms of finding, in terms of both US and Canadian answers, is that members tell you they want all of the answers.
Right.
So they don't believe in trade-offs. They're like, that sounds good. Oh, that part sounds good as well. And so how do we put something in plan that works but also serves? You just can't have your cake and eat it too. All of these solutions have potential trade-offs, and isolating what members truly value seems to be pretty difficult to do as well.
One of the data points that I think I saw in your survey was, and hopefully you can fact check me, but I think 40 some odd percent of plan members said their group retirement program is where most of their retirement savings is going to come from. So that type of an amount, like 40% of people saying all of their retirement savings will come from their group retirement plan, leads me to believe that it would be good to have an option where you have a decumulation solution within your plan. Now, if you have pots of money in your group plan and pots of money external with an advisor in a TFSA or in some sort of a brokerage account, then maybe the in-plan decumulation solution is not that meaningful. So hopefully in a future state, there is a solution if you want it in plan. And if you don't, there are external solutions where an advisor can help you. But I think talking to members day to day, at some point, you're going to need a game plan on how you take that money and live off of it. And if we could do it in a low cost solution within a group plan, that would be terrific.
So I'm curious, looking at some of the findings from other regions that you may have surveyed, is there anywhere in particular that you see a strong alignment across regions?
I actually think the question is more of where are there differences, because I think one of the key themes from doing this survey globally is just how much alignment there is across. So we survey in 4 different markets: US, Canada, Australia, and the UK. And despite having different plan structures and regulation around them, the sentiment part of individual member in any one of those 4 countries is largely the same. So everybody feels financial concerns are impacting their levels of confidence. To a certain degree, everyone would like some level of guidance or advice to help them in their planning decisions. Where appropriate, they understand and misunderstand target date funds. Those aren't necessarily a vehicle used in all markets. I think where we see differences, probably the most acute difference for this audience is the degree of demand, I guess I would call it, for things like ESG investments. So, and that, I guess, gets more into the nature of political, regulatory, and legislative impact to the these external forces for the DC system. So there's clearly much more demand for ESG investments in the UK, for example, and then there's subsequently more demand in Canada versus the US. That's probably the largest difference we see.
And there's some cohort differences as well with younger people versus people closer to retirement.
Absolutely. And that one I would highlight as that's a common theme across the markets, but then in the kind of totality of the demand that's where we see some differences across countries.
Okay.
Yeah. So final question, or maybe second last, I'll say, is when you think about who we're speaking to today, right? The employers who are looking after their employees and having different types of plans, what's something you want to make sure they hear when you think about all three surveys? What are we walking away from today that's underlined?
Mm-hmm. I think I touched on many of these, and Nick, you might chime in as well. I mean, maybe taking a step back, I think one key thing that I've found from all of our data is, I could talk about data all day, but it's what do you do with this information and how do you make it actionable? For a sponsor with employees today, I would say one of the key things we see are these generational differences. So I guess to start, think about who is in your plan. Who are your employees? Do you have an employee base across all of these different generations? Do you skew older or younger? Because the action steps you take might look and feel different depending on who's in your workforce to begin with. But then I think from the findings of the survey itself, again, it comes down to we have competing financial priorities. So having that whether we like it or not is impacting people saving for retirement and their levels of retirement confidence. So how can we address those competing financial priorities? And then I think the emphasis on target date when it makes sense, depending on the plan of, making sure that you have a target date that is properly diversified. We saw what members understand and what they don't understand. So how can we better address some of those misconceptions? I don't know, Nick, if you'd add anything.
No, I think that's kind of right on the mark. And I think the other thing, I mean, plan sponsors have a lot on their plate. They do. I know the episode I think I listened to before this was on the updated CAP guidelines, and I think plan sponsors are doing a ton here. It's really about we're all, I think, on the same page and rowing in the same direction on how do we improve member outcomes. I think one of the nice things about the survey that we do and having the number of years that we can trend it is members are telling us what they want. Now, will 7 out of 10 members actually call that advisor if you make it available? Perhaps not. But I think overwhelmingly, they're kind of giving us hints on what would be helpful to them, what they'd like to access. They trust their employer. They look at their employee plan as a gold standard. How do you leverage that for the better a little bit more? And I think there's a lot of unique ways to do that, especially if you work with an advisor. But even if you don't, there's a lot of really good ways to do that.
Raheem, anything to add that you want to highlight for?
No, I think Jeri and Nick covered it really nicely. I love this survey. I look forward to it every year, and I'm glad you're kind of adding bits and pieces to it. It's very helpful for us in the field to use that data. I've been talking about it the whole pod. It kind of reinstates what we see on the field, but our sample set is a lot smaller than yours, so it's great to see the results across the different countries that you survey. So thank you for that.
Yeah.
Raheem, this thing for me to highlight is the survey data is really there for the field. It's there for plan sponsors, group advisors. It's there for business partners. I think they'll be attached to this episode. Please do use the data as you see fit if it's helpful to you. If you'd ever like to reach out, you want to hear a little bit more about it, you have questions, please feel free to reach out to me. Be more than happy to answer your questions.
Most definitely. Yeah. I wanted to give a big shout out to MFS. I think this is fantastic having all three points of view here, from the employer plan sponsor, the plan member, and now the advisor. Really, really interesting data that you've come out with. And we'll definitely put all of that in the show notes. So you've inspired me to come up with my own survey as we wrap up this episode. Raheem, we meet so many amazing guests, right? They're very bright people. So selfishly, I'm making my own survey now. Let's go around the table. I want to know what each of you is either reading for a book, watching for a movie, or what is your favorite podcast? Any of those three. What's your favorite that you'd recommend to our listeners? Let's start with you, Jeri.
Ooh, okay. Selfishly, I have a number of books on my Kindle for travel purposes, but I have not opened any of them recently. So I'm going to answer for podcast instead and say that I have just started listening to Good Hang by Amy Poehler. I don't tend to do a lot of work-related podcast listening. I tend to do much more outside of work. That's the one that I would recommend.
Awesome. Nick?
Yeah, I can hit a couple for you. So, I mean, I do a lot of hockey related podcasts that I like to listen to kind of give me a bit of a freer mind. But one that I like that's maybe more fun, it kind of gets me ready for the day with kind of what's gone on within 10 minutes is Wall Street Journal has a What's News podcast. It's like 10 or 12 minutes in the morning, kind of quick hits, get you ready for the day, or then at the end of the day, what happened in the day. And I feel like that's a nice one to kind of just frame what I'm walking into, or what just recapping what the day was a little bit. And then I think from maybe not from a movie perspective, but from a TV perspective, so my wife and I just probably like a lot of people finished Stranger Things a couple of weeks ago, and we've just started watching Dark, which is on Netflix as well, which is a puzzle and a puzzle and a puzzle, it seems, but it's been really good. So that's where I think my TV viewing has found itself right now.
Love it. Raheem?
So kind of opposite to Nick's 10 to 12 minute podcast, the one that I've been enjoying, and you need a lot of time for this one. So if you have a long commute, it's a podcast that's really popular. So hopefully some of you have not heard of it. It's called the Acquired Podcast. And the Acquired Podcast, think of it as a deep dive on the greatest companies that have ever existed. So if you want to know the story of Hermes or Rolex or Google or Berkshire Hathaway, they do a 2 to 3 to sometimes 4 hour deep dives, and they take you from, how it started and where it is today and the in between. So Nick, I know you commute. If you're interested, the Acquired Pod is really cool. A lot of tech leaning, but they do great business stories.
Cool. That sounds interesting.
Yeah.
That does sound interesting.
Yeah, awesome. Well, I'll share for myself. I think there's two podcasts that are on my mind. One is on the
BA podcast.
Obviously.
The BA podcast, obviously.
Oh, of course. I live and breathe it. Exactly. No, it is a lot of fun. I always learn something. But I'd say, yes, in our industry, my good friends, Robin and Al, members of Benefits Alliance, they've got a really interesting podcast called Success Leaves Clues, where you get to hear about the story of successful business owners and how they, what they attribute that to. I just found it a great listen. But on the personal side, I recently was encouraged to start listening to a podcast called The Moth. And it basically is a storytelling podcast. And they come up with different themes. And I'm a bit of an improv gal. So I like to, think on my feet and tell stories every now and then. And I think that would be a really cool to, it's entertaining to listen to and inspirational, but also to try to compete and come up with a story that might get on there one day.
That is awesome.
Very cool.
Well, with that said, it's been a lot of fun. We made surveys fun today. We heard from a lot of different perspectives. And once again, I want to thank Nick and Jeri and always my co-host, Raheem, here for having a very informative episode today. Thank you.
Thank you so much.
This has been the Benefits Alliance Voice. If you enjoyed this episode, please share it with your network and be sure to check out the podcast notes for any additional materials.